Hello everybody, this is yet another video about steals, about deals in the market. The market crashed a few weeks ago, bounced back, and it just crashed right back again, and the deals are here again. So I want to quickly tell you about some stocks that I'm looking at. Of course, the first stock that I'm looking at, which is a top position for me, number one position for me, is Microstrategy. Microstrategy, it seems like there's another chance to hop on the train again. It traded down to $280. This is a stock, Microstrategy, that has one leg in fiat, one leg in Bitcoin. And of course, Bitcoin represents stability. Bitcoin is a rock. Bitcoin is sanity today. Note that Bitcoin is only down 0.66% on the day. Bitcoin, if you look at the past month, it's been roughly flat. I mean, a little down, minus 11%, but that was a peak from a month prior. It has moved next to nothing compared to the market. Now, unfortunately, MicroStrategy has one leg in fiat, and we need to thank the leg in fiat for its discount. So it's down nearly 10%, which means that the price to NAV for MicroStrategy is now a 1.71. If we drop a little more, we will get into the 1.6x price to NAV range, and if we get there, we'll get close to the lowest we saw back in February, late January, if you remember that time. Marathon, right? The miner is also unbearably cheap, quite unbearably cheap. Like this is going to be buyback territory if it keeps dropping. They might need to buy back some stock. Anyways, I cannot believe that. This stock is trading for free. Let's face it. This is a company that is trading for free because 100%, so 94, 95%, let's call it, of that company is Bitcoin. So, what happened to the equipment? What happened to the land? What happened to the wind farm? What happened to their share in Auradine, the semi factory that makes Bitcoin miners? This makes absolutely no sense. So many of these miners right now are in negative value territory, negative enterprise value. I'm sure if I were to recompute that for Mara, they would be in negative enterprise value territory right now. This is no financial advice, of course, but it is alarmingly cheap, unbearably cheap, and MicroStrategy is indeed getting cheaper, minus 10% today. Let's talk about another stock today. And I'm not going to nitpick. In my prior video where I discussed Nvidia, I said if it's at 100, it's my buy level. Well, Nvidia is officially at my buy level now, at 101.80. If we have another bad day tomorrow, we'll be deep into my buy level, and I will be buying some Nvidia. I haven't pulled the trigger yet, but I will. The least controversial, most consensus Mag 7 stock out there is also the cheapest in my spreadsheet. It's trading at a 0.42. Compare that to all of the other big tech firms. It is the cheapest in the way I calculate growth, i.e., growth adjusted valuation is what I do on this channel. I invest in growth stocks, and some of them I want them cheap. Nvidia is going to be reaching that territory. We're talking about the absolute leader. This is the absolute leader in the field. And if you're curious about the innovation and the next wave of growth that's going to happen to Nvidia in the form of Blackwell, I suggest you look at these videos from Alex. He's a professional YouTuber. I'm an amateur. This guy's a pro. He makes great videos. I suggest you look at his videos on Nvidia. I think they are really good, and I think if you had a chance to watch GTC, the full GTC, that's pretty impressive. Some of the stuff that are going to be coming our way. Nvidia is still the leader, and the last thing is the tariff news today. Once again, semis are not part of those tariffs. So are not pharmaceuticals either, but semis are not part of those tariffs. So someone needs to explain to me why it's dropping this much on just recession chatter. This is just a recession chatter at this point. People are still going to invest heavily in AI. I absolutely cannot understand what is happening right now with Nvidia. And of course, I'm going to buy if it drops under 100. It's now officially at my buy level. Let's talk about another company now that also is not on the tariff list, and it is HIMS. Now, granted, even if HIMS was on the tariff list, they only sell in the US. They have a little UK division, but it's like mostly the US anyways. So even if pharma was on the tariff list, HIMS shouldn't be impacted because they make their stuff in the US. But we don't even need to worry about that. There's no worry about that at all, because look, if you look at the news, which I know the market doesn't do, Mr. Market doesn't do, there's new sweeping tariff. Pharma dodges blow. Pharma is not included in the tariff. Pharmaceuticals excluded from the tariffs announced by Trump. Pharmaceuticals, drug companies, digital pharmacy like HIMSS are not going to be impacted by tariffs. That's not the case, at least right now. I know every single news outlet out there seems to think that every single product, every single thing you can imagine is going to have tariff. This is not the case right now. The only explanation, frankly, that I see for HIMSS reacting the way it is, that at this point, HIMSS is just Mr. Market's punching bag, and this is nuts. I will not stand for it. This is absolutely nuts. Imagine you have Mr. Market and he just punches HIMSS. After the great news that we've had of the partnership a few days ago, the stock is back in the $27 range. I cannot understand this. This is market-wide selling. This is basket selling. This is index selling. Let's move on to another stock that I'm closely looking at right now. It's the Trade Desk. The Trade Desk is the world's best-in-class, most leading ad platform. It's a DSP platform. It's the leading one. They're number one. And they're down minus 13% today. On what? Why are they down? I have a hard time understanding how they're down. So what? Temu might stop advertising a little bit in the US. Is that what it is? I could make easily a similar argument that Temu is going to have to double down on advertising because it's going to be much harder to sell because there's going to be some tariffs going on. And so you're going to have less business naturally because of a tariff. And so foreign companies might need to improve their advertising. But this is a platform. If you have a foreign company that doesn't advertise in another country, well, guess what? You'll have a domestic company who advertises. This is an international platform. I cannot understand why this stock is down 13% today for an unrelated business, in an unrelated field, period, besides the fact that it operates in the economy. But aside from the fact that it operates in the economy, it's unrelated. And by the way, I'll just leave that chart out there, performance of a Trade Desk over the past 8 years and a half. You can see 41%, and that's after today's major drop too, by the way. Moving on to two more stocks, which, once again, I never realized that these US bank disruptors had meaningful businesses abroad. I know Robinhood has a teeny tiny bit of operations in the UK, I believe, but I never realized, and Galileo does touch some international, I believe, but this is tiny part of the business. These businesses are mostly U.S. disruptors, mostly U.S. businesses. And they're in the service business anyways. They're in the service space anyways. They don't transfer goods. And look, SoFi is down 13, almost 14%. Robinhood is down almost 11% if you add the after-hour movement. This is entirely ridiculous. These companies, some people say, oh, well, big tech is dropping because Europe is going to tax big tech, is going to tax, I don't know, Facebook is going to be taxed in Europe. They're going to tax WhatsApp or whatever. So some people are making this argument as to why, say, stocks like Meta are dropping. You can't even argue that for these. They don't operate abroad. They're not going to be taxed. I cannot understand this, except, unfortunately, I can understand it. What I understand is that this is yet again a sad day for IQ. This is yet again a sad day for those of us trying to make sense. This is 2020 and 2022 all over again. 2022, it was all about the Fed. 2020, it was all about the events of 2020. Well, 2025 seems to be like it's all going to be about tariff on, tariff off, tariff on, tariff off. This is so annoying because, frankly, in my view, I just want to analyze stocks. I just want to do deep dive on stocks. And I blame what's happening to say the least, like, take a business like HIMSS. This business has no business dropping. Take these banks. They have no business dropping on these. This is happening. Why? Because of Jack Bockel's index funds and the view on index funds. Now you have no price discovery in the market. People just buy mindlessly buckets of stocks, and buckets are sold and buckets are bought. And I agree with Cathie Wood. This is not my original thought, by the way. This is a thought that Cathie Wood develops in every single over interview, which is the index funds are toxic because they don't enable price discovery, and they lead to, yes, opportunities for people like us, but that's opportunities if you've been in the markets for a while like I have, and you don't have margin, and you do very, very careful with options, right? If you just get started and say you go heavy with the options or you go heavy in the margin, here you had an investor who did all of the work and they get wiped out. So that's why on this channel I was talking about do very, very little margin if you're going to do margin. Be extremely careful with options. I feel for those who may be getting wiped out right now because they did not exercise extreme caution. Because extreme caution is warranted, because obviously these moves do not follow logic. And that's because of the buckets. That's because of index funds. In fact, if you look at the Chinese stocks, they didn't drop nearly as much as US stocks. Anyways, not all stocks are the same. If you're not impacted, the same. And I will conclude this video by saying to those, and I see in the comment section, those say, oh, this will lead to a recession. Well, guess what? A recession is likely coming anyways in the numbers, because if actually we're cutting $1 trillion of government spending, you're going to have the recession anyways. But that growth was not genuine in the first place. If a country borrows money to buy products from the economy, to buy labor from the people, it borrows money to buy growth today. And if you reduce government spending by like 20% and all of a sudden you're a recession, well, guess what? The economy was never growing in the first place. And so, and this is not this video, but we can argue about the problem about how growth is calculated all day long. Austrian economists do not believe in the BS of these metrics. It's the classic economists that believe that. And the Bitcoiner that I am, I'm not going to go there. Anyways, the point is, the last thing I'll do is the fiat, the classic economic actors that we have at the wheel right now. They're classic economic actors. If they see that they're about to crash in a wall, do you really, really think they are going to continue driving towards that wall? No, they're going to brake. They're going to try to brake. They're going to adjust. Economic actors adjust. So if it gets bad again tomorrow, and if it's bad again next week, what do you think the Fed's going to do? What do you think Secretary Bessent is going to do? There's going to be actions. If economic actors see they're about to hit a wall, they will brake. Okay, we just haven't reached that max pain point right now. Economic actors are not static. And that's the point I'm trying to make. Sorry if this sounds more like a rant again. I really appreciate your time watching my channel. I'm really grateful for your support. Thank you so much for watching. This was not investment advice, not financial advice. This is just entertainment. Please like, please subscribe, follow me on Patreon, follow me on X, and I'm about to go back to my accounts and see if there's any deals after hours. Have a great day. Thanks for watching.